Well, hello and welcome everyone to your midweek live. This is Ankit here, and I'll be going through the markets, taking a look at things, do our due diligence, do our process, and then we'll take a look at some possible setups. And so let's get into it and jump into the market analysis.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
Again, it was quite an active day in the markets. Anybody that's in the Discord, we've been talking about it all morning. There's definitely a lot of movement. So let's just jump right into the headlines here today. And again, like I said, it's a volatile day. And a lot of that really surrounded by that rumor around the Powell firing. And again, we heard the news that, President Trump is going to fire Chair Powell. And that really drastically moved the markets to the downside. And we saw a massive move in the dollar as well. And again, if you take a look at dollar the way we were before and after, it was almost a 1% move. So we've seen a lot of recovery since then. As we heard that the news was not true, and then we just saw a massive recovery. So needless to say, great market environment, a lot of volatility. Again, these are the days where if you were able to take advantage of that volatility, it's great. If you get caught up on the wrong side, it's just part of the game. That's just the way news works. Outside of this news, we had the PPI number today, and that was lower than expected. But we did not see it affected the dollar as much. So dollar definitely has been doing well. I've been talking about dollar lately, and with this move today, the question really is anything changed for the dollar? So we'll take a look at it as we go. Let's just jump right into the performance today, or so far this week. This is a weekly performance, just to make a note there. So we are seeing relative weakness in the Aussie and the Kiwi. Kiwi especially down the most, 0.69%. Yen, again, mostly flat, but we know yen has been the big mover. We just getting a nice little rally in the yen today, reversing some of those losses. But again, if you take a look at this board today versus yesterday, it would be a day and night difference. Here we are, dollar. Despite of that pullback, dollar still looking strong, 0.63%. So we definitely want to continue looking at the dollar. You can see that the middle of this, the European currency is just not moving as much. Pound was one of the weakest currency, but we're getting a bit of a bounce there in pound as well. So the question is, what's really moving? Dollar and CAD. They're moving, and then we're looking at some weakness in these growth currencies. And remember, this is velocity. This is the thing that's moving right now. But when we take a look at trends, that's where things get a little bit more clear. The pound, even though it's flat, it's still in a downtrend. So yen, on the other hand, still in a downtrend, even though it looks like it's flat. So we definitely want to take advantage of these bear rallies and pullbacks to get into those trends. But again, if you look at percentage change wise, Kiwi dollar, really the best move, even Kiwi CAD moving nicely here as well. So we'll do today is that not only the dollar, we'll take a look at some Canadian dollar crosses as well. Now let's go into the broader markets. You can see S&P slightly down, World Stock Index slightly down. Overall, if we look at the trend, they are just consolidating. Decent gains over here. Crypto moving nicely. We're seeing additional gains in some cryptos so far this week. Gold doing well, and is the oil market. Now in the crypto world, you can see that really where the big jump is the Ethereum and Litecoin. Bitcoin, remember, Bitcoin made a new high last week. It's sort of kind of be off those highs. We saw another high, but then it pulled back. But really, Ethereum is the one that's really playing a catch up here. So anybody that's just kind of looking at that performance chasing, I think Ethereum looks the best here. Now let's take a look at this chart and look at the outlook. So if you look at the chart here in the broader markets, this is where, even though we're getting a little bit more slight pullback, markets are still consolidating, which means that markets are still in a better shape, doing well. That's really where we are in the broader markets. Now, let's take a look at what's happening in the news front. And you can see on the news front, yesterday we had mixed inflation report out of the U.S. Outside of that, really not a whole lot. And then today, you can see PPI came in lower than expected. So we see the bond yields sort of kind of come back off from the recent highs. But overall, you can see the trend is there. The yields have been rising, and now the dollar is turning here as well. In between, we're just getting small pullbacks in between. So overall, not a whole lot on the news front. I think inflation was really the one that a lot of traders were kind of watching, but that was not clear. So once the news settle, once the news get digested, that's where you start to look at those trends as we start to see continuation in those trends. Now tonight we have the Aussie employment report. So anybody that wants to trade the Aussie, Aussie overall has been in a sideways sort of a trend. If the Aussie is going to move, we'll take a look at the Aussie the employment report tonight. And then really, we are left with the U.S. Retail sales. That will be tomorrow. So not a whole lot, as you can see. If these numbers comes in really above or below expectation, really that's where we see biggest move. But when they come in more in line with expectation, we just we don't get a whole lot of movement, but we get more continuation. And I think right now, the Australian dollar is the one that I was watching this week. So we'll take a look at the Australian dollar pairs as well. They're expecting no change in that employment rate, but they're looking for an increase in their employment numbers. So we'll take a look at that one. And also the retail sales out of the US will be important. And looking at these numbers, they're looking for positive numbers. And if these number comes out positive, like I said, I won't be surprised. Numbers are positive, sentiment in the markets are positive. We'll probably see a continuation of what we are seeing. So what we're going to do here, again, first, let's take a look at where the velocity score is. As you can see, some velocity scores are lining up a trend, and some velocity scores are against the counter trend, like the pound and the yen. They're just having a short-term rally. So when we see this, I want to take a look at those and short those bear rallies. And the dollar, again, remains a +1. That's the one we were going to talk about. The European currencies, not so much. You're not really getting a huge movement. Again, the European currencies like the euro and the Swiss franc did really well so far this year. But right now, we're just seeing a consolidation there. Really, where the weakness is in the Australian dollar and the Kiwi. And as the dollar strengthens, I think that just puts some more pressure on the Aussie and Kiwi, especially Kiwi. When we look at the Kiwi chart, we are breaking out of the range on the currency basket, which is significant. That's where it's kind of showing that it's just, again, the Kiwi is moving lower against the basket of currencies, not just against the dollar. So let's just go in and take a look at possible trades ahead. We jump live into the markets.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And then again, if you have any questions, any pairs that you're looking at, just go ahead and type in the chat box. I'll take a look at those as we go. Let's just start with where we are. Let's just start with the broader markets first. So as you can see that I'm actually going to go shorter term here. you can see this is where we had a huge move, and then we pretty much recovered the whole way. So the markets have recovered. Now let's take a look at what the bond yields are doing. And the bond yields are, let's go with the US 10-year. I just type in here US 10-year bond yields, and we can see that this thing also, on the shorter term, it did make a full recovery, pulling back a little bit. But as you go higher time frame, you'll notice that it is sort of in an uptrend, and in an uptrend, pullbacks get bought into. So far on the daily trend, I think the yields have been rising. Here's a 4-hour chart. Yeah, today just being a volatile day, but I think overall holding steady. Now let's just come to the dollar. Now dollar is the one that really moved a lot. You can see where we were. And again, this is how quickly things moved this morning. We were in a very nice high base in the dollar, did break up above that. And so the prior resistance became the support. And pretty much on that news, we got a sharp move down. Now we had a massive recovery right over here on this candle. But since then, again, I'm surprised because everything else sort of recovered. The dollar's still not fully recovered. Dollar is sort of, kind of giving back some of that recovery it made. Now, when I go on our daily chart, over here start to looks a little bit more clear. You can see things are making higher highs and higher lows. As I zoom into the chart, you notice that this thing is right above. This is a resistance level that it broke, and that's exactly the level that we retested today. So overall, from a technical structure, from a trend structure, it still looks pretty positive. But now when I go in the shorter term, again, not, this is, again, there was a good chance for a dollar to recover, but it's sort of, losing some of its gains here. So again, the day's not over yet. We'll see where it goes. But yeah, dollar has definitely had a very dramatic day in the markets today. Now, a lot of the focus, like I said, is on the dollar, but take a look at the CAD. Now, when we look at the dollar, you saw, dollars kind of made it right up here and then kind of recovering, losing that recovery. But look at CAD. CAD made a full recovery. So I think CAD is also the one that is doing well. I mean, similar to the dollar, CAD did break out yesterday, but so far it's kind of holding it a lot better. So we're going to take a look at some of the Canadian dollar crosses here. But outside of that, I would say the Swiss franc, I go on a daily trend. This thing you can see is consolidating. I'm surprised. Again, this one failed to break above this resistance here. So you can see that we tested that resistance 2 times. And even today with that big spike, we got this above that. And then we just rolled over here. So again, until or unless it really wants to break higher or lower, this exponential moving average is a good indication for where the trend is. This is sideways. If this breaks lower, I think we probably see more further weakness. But right now, holding steady. Same thing goes with the euro. You can see that euro just came back towards that support, and it's just holding on to that one. So these things are still in a consolidation pattern. But again, depending on which way it breaks, is where I think the next big move is going to be. The British pound is the one that everybody know. A lot of traders took advantage of this down move. And right now you can see that this is just a bear rally. So anytime that you see a trend and you see some velocity going the other way, again, that's why it doesn't mean we just want to go in and play counter trend. When the trends are clear, we want to be looking for those bear rallies to sell into. On the other hand, when we have a good sideways direction, then you want to be buyer against the support and seller against the resistance. But when you have trends in place, then that's where you want to start playing those bull pullbacks and bear rallies. I think pound just falls into that bear rally formation here on a daily chart. You can see this is the support here. This is the, as long as it stays below this exponential moving average, I think probably stay weak. And you can see so far, today did reject that level. So I still personally like this on the short side. In the shorter term, it's just having a little bit of a bear rally. It's not rolling over yet, so I'm not really ready to jump into the pound short. But once we see a rollover, I think that's where I would like to jump in here. And now same thing goes with the yen. Yen, you can see that has been in a downtrend, and we're just getting a bit of a pop today. So the question is that Should I go and short the yen right away? No, because again, the candlestick is not completed yet. It's not giving us a signal it's ready to roll over yet. So again, going shorter term, the momentum in the yen is a little stronger, so it's not ready to roll over yet. But just realize that this is in a nice strong downtrend. We're getting a nice little move to the upside, so it's still a bear rally to me. Now let's go into the Kiwi. The Kiwi is the one I wanted to talk about because this on a currency basket, it is breaking. Let's just go zoom out here. Let's go the Kiwi here. Let's go zoom out here. So you can see that it's almost, it was a lot more weaker earlier before, but you can see very similar pattern what we saw back here in May. In May, we did break, and then after that, we got a nice little rally, got above the resistance, and fell right below. So now, if this is the break, and now at this point, the EMA was not really as bearish, but now we're seeing EMA, slightly sloping lower. So if this is a break, I think we will probably want to take a look at some of the Kiwi crosses here. The first one, before we look on the pair, let's take a look at the Aussie here. As you can see, that Aussie is the one that I still like to the downside. Once we had a big break above that resistance, prior resistance became the support. Now, as long as it stays on that support, I still like Aussie to the downside. If this falls right back below, I think then the break, that was probably just a false break. So based on what we just looked at, let's just start with some of the pairings. So first one I want to take a look at is Kiwi CAD. Again, this one I wanted to take a look at because it looks very similar to the Kiwi basket here. You got a nice defined range. And look at this price action here. Quite choppy, right? But again, if the Kiwi is the one that is going to show some relative strength, I think I want to take a look at that break of this support. So Kiwi CAD again goes on the top of the list here. We'll see how the daily closes today, but you can see that this looks like a nice little clean break to me here. The only other time where we had a false break was really at end of June, but you can see that we're not really seeing a big rejection here. So again, this is where start going to a 4-hour chart. You're gonna start noticing some bear rallies to short into. And I think that's really where we are. Probably see a little bear rally to short into. Again, I think Kiwi CAD kind of goes really on the top of the list here for me as far as that relative strength of weakness go. Now, let's go into the other ones like Kiwi Dollar. Now, Kiwi Dollar, you can see, it still has some ranges to clear, but you can see where this time around, the trend or the momentum is definitely weaker. So bear rallies are getting shorted into. And same thing goes with a lot of these dollar crosses. Like we can take a look at Aussie dollar. And you can see, okay, Aussie dollar is sideways. So don't really love that here. But let's go into pairs like, we were looking at dollar Swiss franc. And actually worked out very nicely here off this very long protracted base. We got a breakout here. So at this point, this prior resistance is now the support. As long as the prices stay above this 79.80 area, I still like it further to the upside on a bull pullback here. So the candle is not completed, but I still like this on a further bull pullback here. And you want to really just set these levels that are going to be important. And as long as it stays above it, we like it to the upside here. So that's the other one. Let's start going through the list here. Again, European currencies, not so much. You can see there was a downtrend here in the euro dollar, but really that's not where the big move has been. But you can see that it's really come off from this 118 down to 116.52 here. Still, I think we'll probably see some bear rallies to short into here. Let's take a look at other ones, even dollar CAD. You can see dollar CAD is kind of going sideways. We had a big move or a big candle today. But overall, I think CAD and dollar are kind of moving in tandem with one of those days where they do diverge. Overall, they're moving very nicely. So a lot of the other questions or trades that we had early this week was in the yen crosses. As you can see, those yen pairs have been working really well. overall, it's been in a nice little uptrend here. Shorter term, I think, is pulling back. We could see a further pullback before we want to buy into the yen here. You can see some of these trends have been running for way long. I mean, take a look at this Swiss franc yen. Once we broke out above that resistance at 176, it has continued to stay above. And so far, you can see that it's above the parabolic SAR, above the EMA. So it's just pulling back in that shorter term. So let me know if any other pairs that you're taking a look at. Let me also take a look at dollar yen. This was another pair that we were looking at early this week. Worked out really well, but again, seems like it's pausing exactly where it paused last time. The question is, can we get above this area? 148.90 is the next is the prior high, or 149. It's currently sitting at 147.85. Overall, you can see that it's still in an uptrend, still above the moving average here. And again, today's just the candlestick today, it throws everything off because everything was looking very decent before you're getting that big move down here. So, question is, technically speaking, we're getting some distortion here. But the big question really is that is this just a pullback to sort of buy into? And personally speaking, I think dollar has been one of the worst currencies so far this year, and and again, based on where we are, based on where the yields are, we are getting a change in the trend. Let me actually pull up the daily chart on this one, on a trend chart here. So you'll see on a daily chart, this thing has finally gotten above this 50-day moving average, and let me show you how long it has been below that. I mean, this goes back to February pretty much. You can see right here, 1, 2, 3, and then 4 times it have rejected that level. So here we are. We are right at that 50-day moving average. I mean, early today, things were looking a lot awesome. But the question is it just a pullback? And if that's the case, we want to buy into that. Am I ready to pull the trigger yet? I mean, I did try to buy into that, recovery. So far, I mean, this thing is kind of rolling over here, not something I want to see. But again, depending on what your time frame is on holding that trade, I definitely like it better on this higher time frame. I think the shorter term just looks a little bit distorted with that big sharp reversal today. So what we need to see is, the recovery continue to happen. And I think that's where we see a resumption of that trend. If this has more downside risk, we'll probably see a further retest of that level. But you can see this is the prior level of resistance, is another support area. As long as support holds in place, I think it has a nice opportunity to kind of continue in that direction. All right, let me just take a look at some of the other pairings. Aussie Kiwi, I've talked about this divergence, and I mean, you can see this thing, they go sideways, but when they start to diverge, you can see the divergence here. So Aussie Kiwi actually looks really good over here. Here's the 4-hour chart. You can see that, this thing has been on a tear. We got a little bit of a consolidation, and they rally off of that. So I think you can see that pretty clearly here, that the Aussie is the better performing currency, and then Kiwi looks the weakest here. So I think Kiwi just in general just looks pretty weak across the board. So depending on, you take a look at Kiwi against the dollar, or Kiwi against the CAD, or even any other currency, like what else do we think that is likely to gain here? I mean, the yen is just a counter trade here. It's still in a downtrend here. Some of the European currencies are going sideways, not really looking to jump on euro and Swiss franc. Pound actually looks better to me here, so pound onto the short side. What else we want to buy? CAD. I mean, CAD really hasn't cleared out the resistance, but again, has the potential to break out. Again, we just had the CAD CPI report this week. It was actually lost a bit stronger than expected. So again, the Bank of Canada is not expected to cut rates here. So I think CAD, along with the dollar, can strengthen in the shorter term. I mean, the only other currency, like I said, Aussie is the one that I'm really paying close attention to. This prior resistance is not the support. Price action wise, not the best. I mean, look at the wicks that we're getting here. But, this thing again goes on the watch list here, but just don't have a greatest clarity on this one. But as long as it stays above that level, I think it will be worth taking a look at on the long side, as long as it stays above this level here. And again, Kiwi looks the weakest here to me. So depending on how you want to pair those things, I think it looks kind of clear here. The main one, like I said, I'll be taking a look at is the Kiwi CAD. Where does it go from here? Is this a true break? Probably going to continue to look at that continuation pattern over there. And then also the Kiwi dollar, like I said, kind of looks the same as well. But for that, I think we need to see dollar, hold on to some of the gains that we have seen. But again, in this case, the Kiwi dollar is below the 20 to 52 moving average. So if I have to really start shorting the bear rallies, now 60 is a good level where it spends some time before breaking. So sitting at about 159.50 area, 60 is the level of resistance here, or 60 to 60. Where's the next level here? 60 to 60.25. I think as long as it stays below that, we probably see a continuation of that move to the downside. All right. Well, looks like we're all on the same page here. I mean, it's nice. Like I said, we've kind of covered quite a bit in the markets in the Discord today. So I think this is a good time to sort of take that little break here and see where you go. I think we had big movements in both the yen this week, in the pound, and in the dollar today. So the big question is, where do we go from here? I think we just have to wait for how the market's going to end today. The broader markets still look positive here, so I wouldn't be surprised that the broader markets actually breaks out. Now, I think the dollar is just the one that is showing some weakness here, so we'll see how it ends. If I look at the bond yields, kind of doing the similar thing. So one of the things that we definitely seen a change in the last few weeks or a few days is that we start to see the yields and the dollars start to get more correlated. So if you really look at how the yields and the correlation, sometimes we see things fall back into the correlation, sometimes they deviate from correlation. And for the most part, we have seen the yields and the dollar has deviated from each other, which means that while the yield has stayed pretty strong, dollar has stayed pretty weak. So that's, they totally went opposite from each other. But then you can look at some good periods in the last couple of years where dollar and the yields just moving in the same direction. And that's why, I think we have seen a bit of a recovery in the dollar, because the yields overall continue to rise, or actually has stayed, pretty strong. So you can see this thing was, got above the 20 to 50 moving average. So today, as you can see, the yields are kind of struggling a little bit, and we're seeing the same thing in the dollar. So I think maybe it's worth taking a look at the yields and the dollar correlation. But overall, like I said, we are in the summer trading months. If nothing, again, we heard the news that, not expecting any change on Fed Chair Powell. Again, I think we are back to square one. And, it's funny, as if you've traded in the past, especially like in the first term, this went on like that for pretty much a couple of years where, it's a constant bashing of, hey, they should lower rates, the Fed should do this, blah, blah, blah. But it's funny, though, as you take a look at that period here, I'm just going to go back in time. And this was 2017, 2018, 2019. As you can see what happened with the dollar at that time. I mean, practically dollar was just sideways for the most part. So this, again, gets to tell you that, we can get a lot of chatter here. But until or unless, I mean, I don't even know if if that can happen, if we can really, fire Chair Powell. I don't think that's an outcome, or likely an outcome, because that's an independent body. So again, we definitely have seen a lot of things different in this term. But I think that's why when I saw the news this morning and saying, hey, that's going to happen, I'm like, hey, I still don't think, that could go through. But, here we are. But I just wanted to show you where the dollar is. And, on a daily chart, you can see this is where the dollar was earlier, and this is where we are right now. And I think this is the reason why I do like, as far as a risk to reward, I think there is a catch up to do with the USD to the upside, as long as the turn that we are seeing, it start to materialize here. So whatever happens in these turns is that, these pullback days that you see, you want to buy those pullbacks. That's just the way how you want to trade the trend. You don't want to trade that shorter term or I mean, if your outlook is just to get in and get out, that's a different thing. But in an uptrend, we can see some pullbacks. But if as long as you're clear on the direction, I think that's where you want to continue trading, is wherever the direction is going. So that's very important here. All right, let me go through some questions here. Rudy says, Kiwi is close to the daily support level. Should we still keep it on the watch list short for one more leg down to the support, or stay clear of the stage? Again, let's just take a look at Kiwi. So again, let's see. I mean, depend on how we'll see how the Kiwi close today. But again, I think as long as it stays below this level, again, I still like it to the downside. I think, again, at this point, what we want to see is these moving averages start to turn lower. I think that's where we start to see a bit more of a downward pressure here. But yeah, I think if you are a bit more hesitant because we've seen that little rally here, the real question comes to your mind is, hey, is this same time? Is this going to happen again? Or is this time is going to continue going lower? I think this is where you just want to, wait till, like, let's say the daily close. I think those daily closes comes in very important. But I think it could go either way. I mean, is this a true break? That's always a question. So I think as you are at the support level, again, I think what I would like to do is, here's the 4-hour chart. And you can see 4-hour chart, where did we bounce last time? Where were the wicks were? So you can see this is where the wick was. So a lot of times, if you're not sure, I always like to say, hey, this is the lowest of that candle. If this breaks below this level, I am all in for short. I think that's a decent call to make. But again, whenever you are at these levels, either it can fall right back lower, or you can just make a recovery, and there you go. That was the short-term bottom here. I think we are in this little window here. So do I want to make a decision? Let's say if I want to take a new leg on the Kiwi short, do I want to make the decision here? I mean, this is where I can just say, hey, whichever way it's going to break, show me that will give me a confirmation. But right here, as of now, I think it could go either way. But as long as it stays below this level, I think there's a decent chance for Kiwi to underperform. And again, this is the opposite of last year. I don't know if you remember last year. I mean, last year we actually saw a very nice summer in these growth currencies. I mean, take a look at starting May, June, July. Like, Kiwi was doing really well. And we had a massive move in August, like late July, early August, and that was again based on the whole carry trade unwind with the Japanese yen. We saw a massive move there. But again, is that going to happen again this year? I mean, less likely. So I think at this point, you're just better off trading the relative strength and weakness. One thing to keep in note is that now, if the dollar strengthens, now dollar strength will weigh down on these growth currencies, and that's why I'm kind of surprised this year where dollar weakened so much, but then it didn't really. We saw a big underperformance in Aussie and Kiwi here. As the market rallied, these things stayed weak. So I think that's a pretty good tell that if the dollar strengthened, I don't like to buy the Kiwi, or per se here. I don't love that Kiwi here, because I think if Aussie comes back and roaring back up, I think that's just going to put pressure on pretty much everything against it. Even if you take a look at the Aussie, Euro, and Swiss franc, I know they're holding right now. I won't be surprised if they eventually break lower as well. Depending on where we go from here, again, these are consolidations, so we don't want to be bold here and make that call. But yeah, once we start to break certain key levels, I think that's where you want to start getting a bit more bearish on that currency. Very similar to what we saw in this British pound, where we start to see some weakness. We start to see stay below these moving averages. Now, that's a bit of a signal for me to say, hey, stay on the short side until they break above. So that's really where I'm at. And I think at this point, Kiwi, they are below the 20, the 50 here. I think this looks a little bit more weaker here. So I would rather play more on the bearish side. And a lot of times you'll notice we get these bounces, and in the Asian session especially, we're getting some nice bounces. But notice that by the time US session comes, so here's a good example here, 6 p.m. Eastern time, you can see a big rally here, but then turn lower. And then here we are a day before, We got a nice little rally in the Asian session and then broke lower. So what is it telling you? Hey, I should be, selling these rallies rather than, looking for a break right here. I should be making moves on these bear rallies. So the bear rallies, again, provide great opportunities to go long and short into. Yeah, but I think that's really where we are in a lot of these currencies. And I hope that answers your question. I think Kiwi looks interesting here on the basket level. And I think that's why Kiwi dollar and Kiwi CAD really are on the top of the list here for me. If they are about to break out of that trend, I think that's where we want to take advantage of it. And especially, here, Kiwi CAD, you can see that once it breaks this level, it has been between the 83 to 81.50. But on the lower end, it's, you're looking at about 79, even 80. So there's a decent risk to reward there as well. All right. Let me know. Anybody else have any question, or just type it. Just, ask the question in the Discord. If you do, if anything comes up later, I try to be more active there. And I think it's a great way to sort of keep in touch and sort of continue watching these markets, especially if something comes up, I'll post it over there. So, again, thanks for joining. Great week so far. Again, this is a good sort of a testament. Like when markets are good, when price action is good, you want to be active, and it makes a big difference in your trading experience as well. We were in this sideways, low volatility environment. Now we're seeing a pickup in movements. So as the markets picks up and start to give us more movements, that's where we want to be more active and take advantage of those moves. All right. Well, thanks. Again, let's just wrap things up here. Again, in the next 24 hours, I'm looking at that dollar closely and see where it ends. And if this is giving me a little more of a buying opportunity, again, that's where I will be looking to buying the dip. Aussie employment report tonight. So if you're trading the Aussie, keep an eye on that one. And again, till then, happy trading. Bye-bye, everyone.